Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dah Sing Financial Holdings Limited annual report. Dah Sing Financial Holdings Limited offers a wide range of services through its various segments. The company's personal banking segment provides banking services to individual customers, including deposits, residential mortgage loans, personal loans, overdrafts, vehicle financing, credit card services, insurance sales, and investment services. In addition to personal banking, Dah Sing also offers corporate banking services, which include accepting deposits from commercial, industrial, and institutional customers, as well as providing loans, working capital financing, trade financing services, foreign exchange services, cash management services, and interest rate risk management services. The company's Treasury and Global Markets segment manages investment in securities and provides additional financial services. The Mainland China and Macau banking segment offers personal and corporate banking products and services to customers in these regions. Dah Sing also operates an insurance and investment operations segment, which is involved in insurance, pension fund management, and investment business. This segment provides a range of services including insurance agency, nominee, general insurance, money lending, consultancy, and securities dealing services, as well as investing in properties. Overall, Dah Sing Financial Holdings Limited offers a comprehensive suite of banking, insurance, financial, and related services to individual and corporate customers across Hong Kong, Macau, and the People's Republic of China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The main contributors to revenue growth are the increase in insurance revenue, driven by refined strategic execution and portfolio optimization. Additionally, investment income has increased due to favorable equity market performance and appreciation in financial asset values. The expansion of market presence through new international broker relationships and strengthened penetration in the SME segment has also contributed to revenue growth. Furthermore, net interest income has increased due to lower HKD interest rates and effective funding cost management. Non-interest income has grown due to a one-off fee and higher fee income from contracts with customers. The company's ability to manage its funding costs amid declining interest rates has also been a key driver of revenue growth. Revenue decline drivers. On the other hand, the decline in revenue can be attributed to several factors. The lower loan and deposits balances in Macau banking business have resulted in decreased revenue. Additionally, weak performance in Chinese mainland banking business due to higher credit impairment charges has contributed to revenue decline. Net trading income has also decreased significantly. The decrease in accounts receivable and prepayments, accrued income, and other revenue have further contributed to the decline in revenue. However, it is worth noting that some areas such as insurance revenue and dividend income have shown significant growth, indicating a mixed performance across different business segments. Net income and profit margins. A year of growth, the past year has seen a significant increase in net income and profit margins for the company. Net income rose by 23% year-on-year, with a notable jump from $673.1 million to $156.9 million. This growth was driven primarily by higher net interest income and non-interest income. Profit margins also experienced a substantial increase, with operating profit before impairment losses rising by 24%. The cost-to-income ratio improved significantly, dropping from 47.8% to 43.3%. However, the banking sector as a whole faced tighter profit margins due to intense competition and suppressed lending yields. A closer look at the numbers reveals that net income increased by 46.8%. Largely due to higher net insurance financial expenses. Operating profit before impairment losses also saw a notable increase of 24.3%. The net interest margin expanded by 24 basis points, from 2.17% to 2.41%. The main drivers behind this growth were higher net interest income and non-interest income, as well as lower credit impairment charges. Additionally, the company benefited from higher pension fund management fee income. These factors combined to propel the company's net income and profit margins to new heights. Overall, the past year has been a period of significant growth for the company, with net income and profit margins experiencing substantial increases. As the company continues to navigate the competitive banking sector, it will be interesting to see how these trends evolve in the future. The company's financial performance indicates a healthy trend. According to the provided information, the company has successfully generated positive operating cash flow. This is evident in the net cash from operating activities, which stands at $800,800,717, a clear indication of the company's ability to generate sufficient funds from its core operations. This achievement is significant as it demonstrates the company's efficiency in managing its resources and generating revenue. Positive operating cash flow also suggests that the company has a stable financial foundation, enabling it to invest in growth initiatives, pay off debts, or return value to shareholders. Overall, this development bodes well for the company's future prospects and provides a solid basis for further expansion and success. The company's debt level and interest expenses have shown mixed changes over the years. While there are instances where the debt level has decreased or remained unchanged, there are also instances where it has increased significantly. For example, on page 230 and 232, the total financial liabilities decreased from $122,856,841 to $122,716,577. However, on page 236, the total liabilities have increased by 74%. Similarly, interest expenses have shown both decreases and increases. On page 127, interest expenses decreased by 33%, while on page 298, they increased from $11,670,000 to $17,491,000. The overall trend is not clear-cut, with various sections of the report showing different changes in debt level and interest expenses. However, it can be inferred that there have been some significant changes in both areas, although the direction and magnitude of these changes vary across different pages. The performance of various segments and regions within the company has been mixed. On a positive note, the trading business recorded a strong result, while corporate banking and private banking performed satisfactorily. Additionally, non-interest income saw a significant year-on-year increase of 16.2% to $68 million. In terms of specific business lines, the motor insurance segment, MIC, Greater Bay Area Initiatives, and motor vehicle business line all showed positive results. Furthermore, Hong Kong personal banking and Macau insurance witnessed an increase in carrying value, indicating a growth in these areas. However, there were also segments that underperformed. The pension fund management business of MPFM in Macau struggled, particularly in the retail and SME segments. Meanwhile, Hong Kong corporate banking saw its carrying value decrease to HK$0, while Macau corporate banking's carrying value increased but then dropped to zero. Lastly, Macau personal banking experienced a decline in carrying value from HK$493,023 to HK$72,323. Management's outlook for the company remains cautiously optimistic for 2026. To achieve this goal, they are focusing on areas within their control, including disciplined cost management and selective investment in growth areas. This approach will enable them to respond prudently to future market developments while positioning the group for steady progress. A strong corporate culture is also being cultivated to inspire passion among employees. This includes prioritizing employee development and engagement, with significant increases in staff engagement scores and training hours per employee. The company is also investing in technological transformation as a key driver for future growth in the financial industry. In terms of specific business segments, management is expanding insurance and investment operations through wholly owned subsidiaries in Hong Kong and Macau. They are also offering a variety of insurance products and services, and allocating revenue and funding costs between segments based on market interest rates and transfer pricing mechanism. The company's risk management approach has been prudent, with proactive de-risking of lending portfolios and cautious response to weak loan demand. Management is actively managing down higher-cost time deposits to reduce funding costs. Overall, the company's financial position remains stable, with a net current asset of $4,042,784 as at 31 December 2025. Management is emphasizing the importance of prudent risk management, disciplined cost management, and selective investment in growth areas to position the group for steady progress. The company's financial activities involved several acquisitions and divestitures of financial instruments. Notably, the company acquired interest rate swaps to hedge against certificates of deposit for a total of $187,353. Conversely, it disposed of similar interest rate swaps for $4,281,090. In another instance, the company acquired interest rate swaps to hedge against subordinated notes for $43,998, but later disposed of them for $50,768. Furthermore, the company made significant acquisitions and disposals of other comprehensive income debt securities, with a total acquisition value of $15,684,483 and disposal value of $16,120,373. These transactions demonstrate the company's efforts to manage its financial risks through hedging activities and strategic investments in debt securities. The company's financial activities have been notable in recent years. One significant aspect is its dividend payments. According to the provided information, the company has indeed paid dividends, with specific amounts mentioned for both interim and final dividends in 2025. This indicates a commitment to returning value to shareholders through regular payouts. In addition to paying dividends, the company has also explored other means of utilizing cash. Interestingly, it has used dividend payments to purchase shares from the market. While this may seem counterintuitive, it suggests that the company is actively managing its capital structure and shareholder base. Regarding share buybacks, the information provided indicates that the company has not directly engaged in buying back shares. However, it has acquired shares from the market using cash dividends. This distinction highlights a nuanced approach to managing its equity, where the company is choosing to acquire existing shares rather than repurchasing them outright. That concludes the financial summary for Das Sing Financial Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.